This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end of day video, January 22nd, for ES&Q bonds and crude oil. Very, very eventful day across the board for all four of those futures. Let's start over here with crude. Our algorithm is just flat out crushing it on crude oil. Crude oil is normally a very difficult contract to trade because of the volatility. Our systems are heavily weighted on time cycles. In order to create an accurate algorithm with repeatable results, you have to get the time part of it right, or nothing else works. So our algo got long Friday afternoon. It was right about 58.60. We had this gap open Sunday Globex. Plenty of opportunities to take profits into this. The algo flipped short Monday morning, rode this all the way down, and the price here where it got short was a little over 59, about 59.20. Rode this down into the low of 57.70-ish on Tuesday. Then the algo got long, and then it flipped short. And anytime you see the algorithm go from a long posture to a short posture, or vice versa, very quickly, you typically get a quick move. And so the algo is short from 58.30. It is still short all the way down. Right now we're trading 55.60. Now a little bounce up to 55.80. That is a huge move on a short entry that was Tuesday afternoon. Tuesday afternoon, around 3:30, the algo flipped short, and here we are, a little more than a trading day later with a big move down. Let's take a look at bonds. The algo is absolutely crushes bonds. Here you've got a long entry. Up here it flipped short, back long again, rode this all the way up into our upper extension pivot, short, and then long again. And this is the mirror image of what I mentioned a moment ago. When the algo flips that quickly, there's something going on. And so the algo flipped at 158.12, and this was earlier today. And although the trade triggered about a little after 2 a.m. in the morning, there were plenty of opportunities to get in this. We had a check back to our single daily algo pivot, which at the time was 58.13, and then all the way up, trading above 159. And let me zoom in on this, because I mentioned about getting the time aspects of an algorithm correct. You have to do that first, or nothing else matters. Price is linear. You can't anchor anything to price, because hypothetically, price starts at 0 and goes up. Where are you going to anchor it? And how are you going to anchor it? You can't. If you look at a clock, it's round. There's the same amount of hours, minutes, and seconds in each day. There's the same amount of hours, minutes, and seconds in each trading day. And there are very specific time cycles that ES, NQ, bonds, and crude oil run on. Now, they don't show you those on a chart. They show you price. And off-the-shelf indicators that come with your trading platform don't give you that. And that's why the institutions have just a ton of mathematicians and algorithmic experts and quantitative analysts, that build these systems, because you can't get this off the shelf. You have to understand the time mechanics of the futures trading markets in order to do this with any repeatability. None of our systems have ever been what they call curve fitted. Usually when you buy an off-the-shelf system, and when I say off-the-shelf, I'm talking about for the consumer market, these systems are curve fitted to look at historical data so that the results that they show you look great looking back. Well, hindsight's 20/20. You can't repeat it. And with our systems, because they are anchored to time, they do this day after day after day after day. You just saw it on crude. You see it here again on bonds: long, short, long, short, long, boom. And what you see running through the chart here, these horizontal lines, are our proprietary algorithmic pivots. And so when you get in a position, it gives you time after time after time after time that you can take profits in that position. If you're trading multiple contracts, you can leg out of the position, taking profits along the way. Even on these short moves, you have two opportunities here to take profits. This long move, 1, 2, 3, 4, 5, 6 algorithmic pivot levels at which to take profits. There's no other way to trade, because there are trades that a computer is going to take that no human would take, at least not on a regular basis. You might pick one of these. So bonds trades up here, comes right back down. How many people are buying this dip? Now, they might buy this dip, but did they buy this one? Did they short this jump up in price? Did they buy this? So the only way that this is repeatable consistently on a daily basis is by having a computer algorithm that is linked to the immutable time cycles that futures markets trade off of. So let's take a look at ES and NQ. Now, for our subscribers, they get access to our live chart. The live chart feed is available on Zoom. There's a code, new code every evening. And as long as the market is open, the live chart is running. So you can see the algorithm triggering the long and short entries. And you've got right on the screen, this is exactly what our subscribers see. You've got the algorithmic pivots right on the screen. Now, we want to be able to accommodate different styles, whether someone's a day trader or a swing trader. And we do both by having the left panel running on our swing trading algorithm and the right panel running on our day trading algorithm. Simply, the day trading algorithm runs at a faster cycle, but the cycle mechanics that are in both of these are exactly the same. If you're an institutional trader, an institutional programmer, this is the same stuff. The only difference is we provide this to individual traders. So if you're an individual trader and you're befuddled by these what look like random ups and downs in the market, well, the institutions aren't befuddled because they know the math that drives the market movement. So what we had today was a short entry. We did not get out of this short, and the reason we didn't get out of it is because our upper extension pivot from last night, which runs all the way till the end of RTH today, it was right here to the tick at 33.3750 to the tick from a pivot that was generated last night before Globex opened. That is how precise these systems are. You can go to Twitter, Mark Anthony, and take a look at it. It's posted there. But the pivots that were generated yesterday on the 21st, before Globex opened, the upper extension was exactly right here, 33.3750. Now, what you had happen today is ES took out our proprietary X5 pivot. The X5 system has 5 pivots, as you can imagine. Each morning at 10 o'clock, we create a new X5 pivot, and all the other ones move down. So at 10 o'clock, when we come out with the new X5 pivot, yesterday's X5 moves to X4, yesterday's X4 moves to 3, and so on, and then the X1 pivot from yesterday drops off. Again, if you're an institutional trader or a programmer, you know what I'm talking about, because this is the time cycle. These X5 pivots are the master time cycle that ES runs off of. And so you'll get these initial checkbacks to the tick to our X5 pivot. That's not a coincidence that it came down to the tick. This is the spot where the institutional algos buy the dip until this spot doesn't hold. So it comes down here and breaks, bounces back up right into our trend baseline pivot for today, which is not coincidentally is at the same price, 33.29, is our single daily algo pivot. You can see that on both charts. This is the single daily algo pivot for ES. Today it was 33.29.31. Now, why are these decimalized? Because the algo doesn't care that ES trades 0.25, 0.50, 0.75. That's how accurate the algo is. It's decimalized. So you get the move up into the high, which was right at the tick to our upper extension. You get a move back down to the tick to our X5 pivot, which is where the institutional algos buy the dip, again, until it breaks. And so what you had was this little break. It came up and then it came down. And where did it stop? Exactly at the tick at our daily trend confirmation pivot. I mean, you can't make this up. It does this day after day after day to the tick. You know, we refer to this as to the tick accuracy. I have never seen anything that does this. And trust me, we've priced this so that any trader can pay for it. It's a little bit more than one ES handle a week. $68 a week, 7-day free trial, cancel at any time. Now, if you're a trader and a system isn't worth a handle a week, then there's no sense using it. But for our traders, and let me pull this chart out a little bit more. So here you have a short, and let's take a look at this on the wider chart, because I had multiple traders in our service today who sent me an email that so far in the 3 days this week, which Monday was a half day, so 2.5 days this week, have paid for their entire annual subscription in 3 days. And these are people who just started using this. So here you have Monday. Short trigger 33.26. Multiple opportunities to take profits. We get a bounce up. It comes back down a little bit. The algo triggers long here. And this was Monday also, Monday evening. And you had a very brief long, and then it flipped short. And this is what I referred to earlier. When the algo flips this fast, there's something up. And forgive me, I mentioned this was Monday night. This was Monday morning. And then we get this short, and we had a fast move. There's reasons for the fast move that occurred today. I talked about them on our intraday video I recorded midday today. I don't do a lot of midday videos because we've got quite a bit going on due to the fact that we run an ESNQ, and that's one package. So if you don't trade crude or bonds, that's fine. We have a package just for ES and NQ. We have a separate package for bonds and crude oil. We have a third package for Bitcoin. So you had the system come down here. You had a fast move, which I explained today on the midday video. That's why we recorded it. The math was telling us we were going to get a fast move, and we did. Then the selling dries up, and we get a long. So is that a good trade? Short here, catch this move down into 08, 09, actually down into 07, 33.07. When all that selling dries up, the algo flips long right around 33.11. There was a move up here. Now, our traders didn't have this go up here and give it all back. Why? Because there were about 10 pivot levels that were hit on the way up that provided ample opportunity to leg out of the trade and take profits. Then the system goes short Tuesday, and that was right at the end of the day. And then in early Globex last night, it flipped. And I'm saying this for the third time in this video. When the algo flips that quick, there's going to be a squeeze. And that's what we got. So the algo that was short here very briefly at about 33.22 flipped long about a handle lower. And what we've learned from these algorithms, seeing them in action day after day after day, the smaller the difference there is in price from where it flips, the more likely it is that you're going to get one of these. And so the system was short 33.22, got long again 33.21, and boom, you get a move in Globex back up to 33.36. Now, it goes without saying that you'd much rather be long here than trying to pick shorts and fading this. Then this morning, the algo gets short at 33.31. Now, I want to point something out. From the high today of 33.37 to the early Globex low of 33.13, that's 24 handles. With ES trading above 3,300, 30 odd handles is not a big move in absolute terms, percentage-wise, at all. But the problem is the technical damage occurred not from the size of the move, but how many pivot levels were taken out on the way down. You see, as ES has gotten to one of the most historically overbought extremes ever, each day these pivots are moving up 6, 7, 8 handles. And you get to the point where the floor is raised higher and higher and higher and higher. And it's just not mathematically possible for the S&P 500 futures contract, the ES, to continually do that every day. And so as you raise that floor higher and higher every day, these algorithmic pivots, that's what leads to these fast moves. And because that floor has been raised so high, it does not take much of a move percentage-wise to start doing all kinds of technical damage. And so this doesn't look like a big deal in terms of absolute handles, 33.37 to 33.13 in early Globex tonight. This is a big deal from a mathematical perspective, from an algorithmic perspective, and what this is going to lead to typically. And nobody's got a crystal ball, so who knows what tomorrow brings. But when you start breaking multiple algorithmic pivot levels this fast, well, then the natural inclination is you get people selling into the next move back up, and then it rolls over again. Now, is that going to happen? We'll see. But the beauty of having an algorithm is you don't have to predict. You just let the algo trigger. We've got a very precise triggering mechanism. And one other thing I want to mention, our algorithm does not get fooled by a single long range bar, even a couple of them. And I'm going to go back to the bond chart to show you that specifically. So let's just take today. We have this long entry at 158.12. You had this spike down. Now, how many people were shorting this? Well, the algorithm didn't get out. Why? Because the algorithm looks at a formula that compares time and price literally hundreds of times a second. And so it knew that this change in price was not going to take it out of the equation that triggered it down here. And so you get this move down, and how many people jump on this short? Well, the algo didn't get short for a reason. And so it stays long, and it allows you to profit from the short squeeze that occurred when all the folks that were wrong here realized they were wrong. Now you have the same thing here. And I wonder how many people who shorted this move down too. So just as the algo's time cycle analytics filtered out this shakeout bar, it also filtered out this and this bar and this bar, and then it goes long again. And at the time this video is being recorded, which is right now it's about 9:15 Eastern time, the short that was entered today at 150, I'm short, forgive me, the long that was entered today at 158.12 is still long at 159.04. Humans can't do this. There is no trader. Look, there's traders who are good enough to get in here, but I don't know how many traders are good enough to get in on this, because this is essentially a day trade. How many people are good enough to day trade bonds? Well, our computer is. And so it's still long from this morning. How much higher does this go? I don't know. The algo may roll over and trigger shorts. But until it does, you've got a day trade in bonds from 158.12 up to above 159. So if you'd like to know more about our systems, please go to our website, mercurysignals.com. Actually, we've got a free webinar coming up tomorrow, if you're watching this video, the day or the day after it's been recorded, tomorrow, the 23rd, we have a free webinar at 8 p.m. Eastern. Just go to our website, mercurysignals.com, and click on the webinar item at the top of the page. If you can't make the webinar on the 23rd and you'd like to sign up for a future one, if you're watching this after that date, of course, we typically run a webinar every week. Now, we've customized these packages so that we have one package for ES and NQ. We've got a second package for bonds and crude, and we've got a third package for Bitcoin. And we price these so low. If you only trade ES, or if you're looking at the bonds crude package and you only trade bonds or you only trade crude, if you're a trader and you can't afford $68 a week with a 7-day free trial, but I mean, if you can't afford $68 a week for a system that does this, when I had multiple subscribers today email me that they paid for an entire year's subscription in one day, just on the crude or just on the bonds, it doesn't get any better than this. These are quite simply institutional level algorithms that are available for you, for individual traders. I will say that the pricing that we're offering now is 62% off. What we are now offering for a limited time for $68 a week is normally $183 a week. The price will not stay at this level much longer. So we invite you to go to our website, sign up for a free trial. We do not bill anybody until after the 7-day free trial. And get this, we let you cancel anytime you want, any week. We don't pre-bill a month. So after your free trial runs out, if you still want to maintain the service, we're not billing you for a month. We're billing you 1 week at a time. Why do we do that? Because number one, we think it's the right thing to do. For example, if you subscribe to something and they start billing you and a day or two into it, you change your mind. Well, if you paid for a month in advance, now you've got 28 days that you're not going to use it or you don't want to use it. Well, we don't do that. We bill weekly so that you can change your mind anytime you want. Now, why do we do that? Well, from a business model perspective, it's crazy. We do it because there is nothing else like this. There is nothing else that's accurate, either on a consumer level or an institutional level. So that's going to wrap it up for tonight. We thank you so much for your time. God bless you. God bless your family. And we hope to see you again soon.